Bitcoin is on track to hit $100,000 by 2025, according to analysis by our next guest, Mike McGlone, commodity strategist at Bloomberg Intelligence. Mike, welcome back to the show.
Thank you, David. It's good to be back.
Mike, let's talk about the drivers of 100,000 Bitcoin in 5 years' time. What's going to take us there?
More of the same. See, that's the key thing about Bitcoin is I don't see what's going to stop it from doing what it has been doing for most of its life, and that's appreciating. The key thing it has been doing since it went to 100 and then 1,000 and then 10,000, which has really been the consolidation price for the last 3 years, is it just has a history of adding zero. So if you add some maturity to that, which we should be, because volatility is declining, it's becoming more adopted, to get to the next zero, i.e. from 10,000 basically the first time to get to the next level, it should take probably, instead of last time, it took 4 years. Should probably take 8 years. But then I factor in all the other factors like demand and supply. And a key thing that most of our viewers need to understand about Bitcoin is supply is declining incrementally and will not be impacted by price. Unlike gold, higher prices will pull up supply. So all we need is more adoption, more demand, and I see most indicators pointing positive.
In the past, when Bitcoin has climbed up to the 2017 high, we've seen periods of dramatic corrections. It wasn't a straight line up. Can we see something similar this time?
Well, we've had it. So we've had that big correction from basically around 20,000 down to 3, and then a little bit again this year. So Bitcoin has the benefit of having it's a bear market that's consolidated. It's had a significant period of disdain. It's had a significant correction, and now it's going back up. What's a good example for that? Gold. Gold went to around 1,900, dropped to around 1,000, stayed down for 5 years, went unchanged, and finally broke out to new highs this year. To me, I see Bitcoin doing the same and following gold on that trajectory. The key point is on the other side of the aisle, it's a stock market that hasn't done that yet. At some point, it should, if history is a guide, but questions when.
So you brought up a good point, which is a correlation with gold. I think a lot of Bitcoin traders would like to know not just long-term, but short-term drivers of Bitcoin prices as well. These ups and downs are difficult to predict. Now, we've noticed a very interesting pattern this year, which is that, as you pointed out in your report, Bitcoin has had a very close correlation with gold this year. Can this correlation last?
Yes, I think it's enduring as Bitcoin becomes a more mature digital version of gold. Just look at the 12-month correlations around 0.77. The 52-week is around 0.5. The key fact is it's the highest ever. Now, Bitcoin is following gold, and gold's made new highs, but it's the macroeconomic environment. I think it's quite significant, i.e. unprecedented debt to GDP, quantitative easing, negative rates that makes things like gold and Bitcoin look attractive. And then you look at the correlation to stock market. A lot of people point that out, but I think it's much more spurious, i.e. Bitcoin's been around for 10 years. In the last 10 years, it's just been a very, very significant rally in the stock market. So at some point, when we see some normalization in that stock market appreciation, maybe a bear market, maybe just a period of underperformance, that's when I think we're going to see a lot of flows tipping more towards things like gold and Bitcoin for performance.
Okay. Now, you brought up a very interesting point, which is Bitcoin maturation. Why is it that we've seen maturation towards being a store of value versus maturation towards being like the S&P 500, which is a collection of risk assets?
Well, the big difference, I think, is we've had this enduring rally in the S&P 500. The key metric reached this year is total market cap of U.S. stock market reached the highest ever versus GDP. That's a bit dicey. It's a bit risky. You look at the NASDAQ; it just recently reached an all-time high, but versus most moving averages, say 50 weeks, 50 months, it got very overdone. So we're seeing pretty good, significant signs of being stretched in the stock market. And one thing, bottom line, the stock market needs to depend on is, at least it used to, is earnings. Now it's getting liquidity, but a solid fundamental underpinnings for gold and Bitcoin are what's happening with money. And we know what's going on with QE, debt to GDP. And so I see the underlying foundation for Bitcoin and gold improving, and for the stock market, kind of aging. And a lot of that, we might see some of that transition next year, i.e. also if we have a new administration in this country, which means potentially higher taxes and more regulation.
All right. So Mike, if you think that the underlying drivers for Bitcoin and gold, if I understand correctly, are going to be the same, i.e. quantitative easing, do you see gold headed much higher in the next 5 years as well?
Yep. I don't see, the key question I've been asking myself for at least 2-3 years, I don't see what it's going to take for gold to sustain lower prices go down. But I can think a lot of reasons for it to go higher. The bottom line is, number one, is at some point gold denominated in US dollars if we have weakness in the dollar. But gold is rising versus all currencies because there's just massive amount of supply, that paper money. And gold, the store value, I mean, the amount of ounces of gold it takes to buy an acre of land in Iowa is basically 5. It's the same as it's been for 30 years. That should continue appreciating. I don't see what's going to take to go down, but I see gold breaking out. I see potentially converting 2,000 resistance into support pretty soon. And the bottom line is just what's happening. If you look at gold overlaid with U.S. debt to GDP, which jumped from around 100% last year to over almost 140% this year, it's basically unchanged since 2007. So that bottom line store value is doing what it's supposed to versus fiat paper money.
So, Mike, here's what I'm wondering. What you're saying, if I understand correctly, is that the same drivers of gold are also going to drive Bitcoin. Bitcoin, as it matures, is going to be trading more and more like a store of value, which is what gold is. Why still bother holding gold? Because the same drivers are going to push up both assets, but Bitcoin will have more upside.
New versus old and risks. I mean, we all know Bitcoin is a new technology. It could fail. I don't know. I can't predict what's going to really happen with the technology and regulation. It could be banned. It could be regulated away. Gold's already been past that. You know, it was banned in this country in the 30s, and now it came back, and then things have happened there. But so gold is such a new technology. It's basically like the internet was 40 years ago, 30, 40 years ago. So the big difference I see is if you look at the supply of Bitcoin this next year, it's going to drop to 2%. Last year it was around 3% because of reduced supply. That's the average annual supply of gold historically, and Bitcoin supply will never go up. So I think people are becoming to figure out that as long as there's demand and adoption for this digital store value, the price has to go higher because supply is going down.
Okay, let's talk about Bitcoin potentially being banned. How significant is that risk? We're seeing the ECB, for example, contemplating a digital currency. The Chinese government has already issued experiments of a digital yuan. What's next? Are they just going to ban cryptos?
Yeah, that's the trend that will not end. It's just a matter of time. COVID's helping accelerate it. And Bitcoin has helped bring this process on, i.e., a lot of us use paper money. A lot of us won't touch it anymore because of issues and risks, and it's basically becoming antiquated. Central bank digital currencies, CBDCs, it's just a matter of time, and Bitcoin is the gold to CBDCs, is what I see in the future. So to me, it's just a matter of time. It's how they work it out. I'm not a technologist. I'm a markets guy, and I see that just adding to the demand for Bitcoin, i.e., you need that store value. There's a good place to store value. You don't want to, Bitcoin's not the kind of thing you want to spend, I don't think, because it's basically collectible, but those dollars and those currencies we use, they're great for spending because they don't really hold their value much anymore. There's no interest rate.
All right, let's talk about the short-term outlook here. You said that by the end of the year, which is coming up, Bitcoin will hit a resistance level of $14,000. We're close to that, $13,000 today. I'm looking at the prices. So, and you also wrote in your report that we'll need a major new catalyst to break that resistance. What do you mean by that?
Well, so this year was basically, from a strategist standpoint, was basically straightforward. Bitcoin ended last year near the lower end of its range, which was around 7,000. The upper end of its range was from last year, 14,000. So I look at it as a strategist. Unless something's bearish going on, this is a consolidating bull market. It should just rotate back to the upper end. That's what it's doing. That's just normal markets. That's one thing I love about Bitcoins and cryptos. They have some very recognizable trading patterns. As an ex-trader, you try to recognize those patterns predicted. So that's what I'm looking for this year. And then to get above 14,000, we need something basically more of the same. What's happening this year, you're seeing a lot of institutions getting into space, i.e. MicroStrategy is one of them. Paul Tudor Jones and people are pointing out that, they're starting to understand the relative attractive demand versus supply factors in Bitcoin. I think we're going to see more of that, but I think what we might see next year, now that's where it's going to get dicey, is we need to sustain above 14,000. More of the same is going to take to do that, but it's just a lot of wood to chop.
Now, what's interesting this year is that we had the halving, but the price didn't shoot up immediately. So what happened there? Was that just priced in, or do people just not care about a diminishing supply anymore?
Buy the rumor, sell the fact. I love these facts in the markets. It was, we all know about the halving is going to happen again 2024, right before the next election. The key thing about that is by the time we get to 2024, the supply after the halving will drop below 1%. And what does that mean for relative to demand? So Yeah, it was just that, to me, that was priced in. And then again, let's just remember where Bitcoin was 5, 10 years ago. It's gone a long way and it's maturing rapidly, which is the idea thing to keep point out about Bitcoin this year is, yeah, you watch most measures of volatility. Bitcoin measures of risk and volatility are declining, i.e. 260-day volatility, annualized measure, has been going down all year. Stock market volatility is going up. So if I look at it relative to the NASDAQ, it's basically the same price as the NASDAQ. It's the lowest ever on a volatility weighted basis versus the NASDAQ composite.
So you think that Bitcoin daily volatility will continue to drop as it matures?
Yes, it will continue to drop as it matures, and Bitcoin has a tendency, volatility has a tendency to move, to increase when it breaks out to new highs. So lower volatility is typically indicative of prices ready to move, continue to do what they've been doing and rally. But what I see is a potential inflection point around this 12,000 level with the NASDAQ. The NASDAQ's been holding resistance there. Bitcoin's broke above. Now, it's just little indications, but you look for those little indications for the big picture. And the big picture is that Bitcoin, to me, is gaining the upper hand versus the stock market. And the key thing is volatility. Bitcoin volatility is declining. Stock market volatility has been rising.
Is this a trend that extends to other cryptocurrencies as well, or is it just Bitcoin?
It does, but there's two things to rethink about crypto. There's Bitcoin, store value, digital gold, and then there's 7,000 cryptocurrencies, starting with Ethereum. Ethereum's number 2. Now, Ethereum's doing well and should continue to do well, but it's 1/5 the size. Now, it's because of decentralized exchanges and DeFi faring to do well. But if you watch the simple trends in stable coins, i.e. Tether is the number 1 stable coin. It's around 15 to 16 billion right now. If the trend remains the same for the last 2 years, Tether will become the number 2 crypto next year, i.e. there'll be Bitcoin, the store of value, Tether, it's basically a digital version of the dollar, and then all the others. So the big problem with the broad space is there's too many, there's massive supply and ease of entry, which will, in the history of economics, will limit price appreciation.
Okay, that's very interesting. Let's talk about the election now. We know about potential election outcomes in gold, right? Fiscal stimulus is going to happen either way. Trump wins or Biden wins, and analysts are saying that's going to push up gold. What about for Bitcoin?
Whatever pushes up, the same factors that are pushing up gold are supporting Bitcoin. Now, my simple view in the elections, I do think we're going to see a Democratic sweep. U.S. politics usually work in a pendulum. We had a pendulum of very extreme republicanism. We had to push back a little bit in the midterms, and I think it's going to push back to more Democrat administration for this election, and then push back for the midterms towards Republicans. And so I fully expect a Democratic sweep. The market's starting to price for that. So I expect more regulation, more taxes, and a big fiscal stimulus package. Now, when that comes on, the Fed will probably buy every one of those bonds, all that debt. It's just, why not? They've been doing that. So it adds to QE, it adds the debt to GDP, and those are very significant positive factors for gold and Bitcoin.
Okay. Well, thinking long term, do you think that a stronger U.S. dollar, should it happen? I'm not saying it will, but should a stronger U.S. dollar hit the economy, would that weigh down on Bitcoin then? Is it the same way it weighs down on gold?
Well, the dollar's been, the trade-weighted broad dollar has been rallying, has had a good rally for the last 10 years. And yet what's really been driving that is U.S. stock market. It's the key thing driving the dollar. So there's a high correlation between U.S. stock market outperforming the world and the dollar. Remember, how do you measure the dollar versus other currencies? I've been pointing out that Bitcoin and gold have been going up versus all paper money. So that should continue. But overall, when you're denominated in dollars, if you see dollar strength, that'll be headwinds for Bitcoin and gold. But I fully expect trade-weighted broad dollar just a few months ago was the all-time high. Unless the U.S. stock market continue to outperform the world, which is getting very expensive, then we should expect a little bit of mean reversion in both those key drivers for the dollar, and that is, well, the dollar and the U.S. stock market, which is good for gold and Bitcoin.
Well, Mike, just to cap this off here, what you're saying is, what I've learned today from speaking with you is that gold and Bitcoin are trading more and more like similar assets. The same drivers behind gold are going to be pushing up or down Bitcoin. Bitcoin's trading more like a safe haven asset. Why then would central banks not adopt Bitcoin? Do you think we'll ever see such thing as a Bitcoin standard that could stabilize global currencies?
That's one of my favorite books. When I first read it, I was completely disagreed, and there's no zealot like a convert. I somewhat converted. And I mean that because that's potentially going to happen, is a good probability. And that's the unique thing about Bitcoin. Right now, it's only about $200 billion. So it's too small. If you add a zero to that, it becomes big enough. So that's the unique thing about Bitcoin is higher prices actually increase demand, and there's no increase in supply. It becomes more adopted. So when we have this conversation maybe 10 years from now, it's a good high probability Bitcoin will become part of central bank digital holdings, central bank currency holdings. And one of the biggest holders of Bitcoin in the world is China.
Yeah, it just seems to me like, and correct me if I'm wrong, it just seems to me like when you have an asset where the supply side of the equation isn't going to drastically move up or down, and you only have to worry about the demand side, which is driven by macro forces, the same forces driving gold, it just seems like that would be a stable currency or asset to peg your currencies against.
Exactly. And that type of asset will appreciate versus most notable currencies, because we all know what happens with currencies. Governments create more. They reduce, they add debt to GDP. They lower interest rates to keep the economy going. And that's the unique benefit of Bitcoin. It was designed to be deflationary. I mean, it's quantitative easing versus quantitative tightening.
Mike, thanks very much for coming on the show today. I appreciate your thoughts.
Thanks for having me.
And thank you for watching. I'm David Lin reporting for Kitco News. Don't forget to download the Kitco Gold Live app for live gold and crypto prices.